Hello, everyone. Welcome to today's webinar, Compliance Crossroads, Challenges of Correspondent Banking in International Finance. I'm your moderator, Laura Cohen. I am Director at Velocity FinCrime Solutions, and I specialize in providing innovative anti-money laundering and fraud solutions for financial institutions. Today, we have a very special and intuitive webinar in which we're going to delve deep into some of the challenges correspondent banks play in international finance. As guests, we have Ms. Jaysa Rodriguez. She is the founder and president of Innova Compliance Solutions. She provides consulting on anti-money laundering sanctions and fraud regulations for financial and insurance companies. Alongside her, we have Vineet Mishra. He is our chief of product here at the Ailerser Group. He comes in with 18 years of leading industry expertise in IT, specifically to banking and finance. Vinny specializes in leading implementation of financial crime prevention software suites across the USA, Canada, and Australia's financial institutions. We're going to delve into a very crucial topic in international finance, and that is correspondent banking, with a very special focus on its role in Latin America. So, what is correspondent banking? Correspondent banking is a system that allows banks to conduct business and provide services in regions where they don't have a physical presence. This is particularly important in international finance as it facilitates cross-border transactions, trade financing, and foreign exchange. In Latin America, correspondent banks play a vital role in bridging financial gaps, enabling local banks to offer a broader range of services to their customers. So we have Jaysa today. Jaysa, thank you so much for being with us. My first topic of question for you, and would love to hear your opinion and as it relates to your expertise. First and foremost, how can international banks effectively de-risk their correspondent banking relationships, and what role does technology play in enhancing risk management practices in correspondent banking?
Hey, Laura, thanks for having me. It's always a pleasure working with you and your team. And this is a very hot topic because we hear a lot of de-risking, and the respondents, which are the clients' banks, they don't understand why yesterday I had an account, corresponding account, and tomorrow I don't have any. And the explanations are just simple. We're de-risking, you know. So that part of de-risking, it's very delicate. You cannot say from one day to the other, I don't like you anymore. So understanding first what is the risk appetite of your institution, and knowing your customers and how they're dealing with their customers, the customer's customer, you will understand if from the onboarding level you are already very close to the borderline risk appetite and your tolerance, because you may tolerate some risk, but if it goes beyond that, obviously you cannot onboard them. But I know that things can change from day to day. What the risk was today, it may change tomorrow, and that will push institutions for de-risking. But correct communication is important, because maybe if before you start communicating that you are no longer able to do corresponding transactions with us, maybe let's sit down at the table. Hey, this type of risk that we have by providing services to you is getting above what my risk appetites can accept. So how can we manage for you to lower that risk so I can remain below the risk appetite? So that open table communication, it hopefully can occur. I don't see it that much, and that's concerning. I don't see it. So a lot of financial institutions, and me talking about international banking institutions in Puerto Rico, they're struggling with this. So if hopefully we can have people in this webinar that are offering correspondent services, that please open communications with your clients before just closing the relationships. It takes a lot of effort, and that will impact their services to their clients. So we don't want to take people out of business. We just need to try to manage the risk so everybody can remain below what is accepted.
Yeah,
And
absolutely. We hear the same
yeah,
thing on our side as well.
yeah,
It's a bit concerning.
and obviously on the part of technology, that's we don't have physical files anymore. We don't have rooms and rooms and rooms and rooms or files that you have to go in and pick them up. You know, everything is in the data. So I know we're gonna talk a bit more after that, but the risk appetite has to be calculated. It's not only let me see if I like you today or I don't like you tomorrow. It has to be calculated, and for that you need the correct data to perform a correct assessment on when that level of tolerance is going beyond what you can get.
That was a great answer. Thanks so much. So going on to our next topic, and I feel like this is a very important topic, and it's something that not everyone in Latin America and in international banking knows about or knows it by name per se. So one very important thing is entity resolution. So Yesa, in your experience, how does entity resolution support banks' compliance and risk management? What are some of the challenges that you've seen that the banks are facing when not having the ability to monitor their clients?
Yeah, this is the know your customer's customer scenario where I think this is one of the biggest challenges in correspondent banking relationships. Obviously, we're at the onboarding level, the respondent bank has to provide all of their policies, procedures, so that correspondent bank can understand the level of compliance, scrutiny, the risk appetite, how they manage their processes. And one of them is how your client reviews, validates, and has its processes to identify entities, those relationships with whom they're transacting with, because at the end, they're going to be passing those funds through your bank, you know? So that understanding at the onboarding level is very important, but having the correct data, systems, having correct processes where you can acquire that information quickly. Because even though correspondent banks may give you maybe 7 days, 10 days, 2 weeks to respond for any inquiry, RFIs that they are sending, uh, banks, you shouldn't keep them long waiting, You should answer as quickly as possible, because that is a red flag. Hey, I keep asking this client of mine, and they're taking always over the amount of time that I've given them to provide the information. So that's a red flag. You're going to be starting your de-risking process yourself, because you are not providing the information accurately, promptly. That is very important. So having everything organized correctly in your systems on your customer's profile will help you out with the correct relationship and very open and transparent relationship with your correspondent bank.
Agreed. And I wanted to bring Vinny in from his chief of product perspective, if you can, tell us, how can financial institutions leverage technology and data analytics to be able to enhance entity resolution and capabilities?
Yeah, thanks for the question, Laura. So technology can be used multiple different ways. Let's be very specific towards the topic of today's discussion, which is correspondent banking and cross-border payments, right? So in terms of correspondent banking, cross-border payments, technology becomes really critical. It's because the way you're dealing with multiple different countries and multiple different systems, you really have to have an efficient technology. And as you mentioned, half of the answer is in your question itself, as you said, entity resolution. So entity resolution is a piece which is really critical in terms of correspondent banking, because what you're doing in correspondent banking, you're dealing with multiple different types of entities, other financial institutions, people who are sending money, receiving money. So in correspondent banking, what I've experienced in the past is you could deal up to 10 different parties into one transaction. So, and where it leads to you is finding out that the entities you're dealing with, how do you take care of your sanctions compliance, plus at the same time, how do you manage all of those different entities as well? So an entity resolution, how it helps is it basically helps you, makes you get unique entities. So how Velocity uses, how our product uses entity resolution also, I'm just bringing it in and the mix as well. So how the Velocity is doing is basically what we do is we basically try to create a database of third-party entities. When we say third-party, means anybody which is not the direct customer of the financial institution which you're managing with. So everybody becomes third party. All those third party is uniquely clustered under a different cluster and basically uniquely set into a database. So next time if the similar party comes in, system recognizes and basically helps you. And it helps you then in multiple different ways. For example, one-to-many fund transfer is a very popular thing amongst correspondent banking and cross-border payments as well. You may land up transferring the money to the same person, but your system lands up recognizing it's a different person. So that's a very good use case scenario. Other than that, in correspondent banking, technology is very helpful for you to find out is there's a key thing actually, right? Very key feature, which I think is very important. This key feature is basically if you talk about the correspondent banking customers, right? Who are your customers? Most of the time you have financial institutions as your customers, right? Now, financial institutions, they have their own customers, right? The key part is managing your customer's customer. And I hope everybody who's listening to it knows about correspondent banking, understands what I'm talking about, right? Managing your customer's customer is the challenge. And how do you reach at that level? When you generate an AML alert, right? What is the alert has to be on your customer name, which is financial institution, or it has to be on the end customer name who is basically sending the money or receiving the money. So those are some critical pieces which has to be addressed, and the technology has to be in such a way that this can be managed and controlled in very well and in a regulatory environment.
Okay, on to the next topic and something very important, right? Data quality and integration. And I really want to focus on configuration by compliance. So this is kind of like a two-part question, and we'd love to hear, Yesa, from yourself, but also from Vineet. What role does technology play in facilitating the integration and resolution of customer data inconsistencies? And how does it help the compliance team to have the ability to make changes on their own platform without the vendor?
Yeah, this is very interesting, and it always creates a bit of friction between who's supposed to do what. But we need to start by understanding that compliance, they're experts in compliance matters, and IT personnel, they're experts in IT personnel. So compliance shouldn't be doing anything on the part of IT, and IT shouldn't be doing anything on the part of compliance, but they need to be working together all the time. IT cannot say, hey, you should configure a flag for large transactions over 50,000. Why is IT saying or recommending how you configure a flag? The risks are on the part of compliance. Compliance should say, hey, I need the system to have the capabilities so I can mitigate this risk, so I can assess these scenarios. So that's the part that compliance needs to tell IT, this is what I need. And obviously communication with the vendor it's key. The vendor has to be involved every step of the way. It's not only selling the system, is that behind the scenes where IT is there, and then the part of configuring and testing that your configuration has been done correctly. Every step of the way. So this is like a initial family relationship that needs to be created when everything is being established and has to continue, because the initial configuration is not going to remain the same throughout the whole history of your institution. It's not, because your risks change, so your system has to change. Any updates on the level of the system, you need to see on compliance what's the impact. So this is an ongoing relationship. So if from the beginning you have a good communication between all the parties of the configuration setup, you're going to be fine. But if not, it's going to be on the contrary, because there's going to be gaps on the configurations. And then when you have a technical validation, you have your auditors, examiners, then you're going to have raising any flags or uh, exceptions that shouldn't be there from the beginning.
Right.
I know data is everything, and I know that Vinny can give us more on that. He's the expert on data and systems. Vinny, am I correct on assuming that compliance and IT and the vendor need to act together to make this happen?
Yes, Yeja, very well said. I think, compliance and IT and the vendor, software provider, actually here to be specific, has to work together. All of them has to work together. Because if you do not work together, these are all different pieces of a puzzle, which everybody is together solving it to it. Data is really critical. And this I say to every single demonstration which I make to my client, and everywhere I go, I talk to, I say that data is very critical. But what is more critical than data is when you are integrating the data into a software system, especially a financial crime monitoring system. If you don't get your data right, doesn't matter what type of technology you have built into your system, what AI you have got, what machine learning you have got, AI, machine learning, everything works on data. So one of the most critical part, which you would say that take few steps back and start from the basic, which is getting your data rightly integrated into your compliance system. Now, I'm not talking about specifically here any compliance system. This is a very critical thing for any part. Now, once you have got your data right, and as you said, like this is really good point, right? That it's not a one piece to work together. It's not an individual thing. It's a team effort, right? We need banks IT team support because IT team is looking into several different data issues. System is every day software systems are recognizing data exceptions, and then there has to be a very detailed data exception management process. And then after data exceptions are managed, then has to be a back and forth communication between compliance team and the systems team. So yeah, very well said on that. I totally agree that all these pieces has to work together.
Let's move forward. Let's move on to cross-border transactions, one of the most popular things in correspondent banking. I wanted to ask you, what due diligence processes are essential for compliance officers to implement when engaging in cross-border transactions? And, we can cover that as you wish. And let's address also OFAC transactions.
Yeah, I think cross-border, that's one of the main issues on the international banking industry in Puerto Rico, because we mostly deal with foreign countries. Uh, we cannot have customers from Puerto Rico. We do have institutions that have clients in the US, but it's not the majority. We deal with foreign institutions. And that already is a risk for that correspondent bank. So the reliance on who's supposed to do and comply with sanctions, OFAC reviews, banks should be careful, because everybody under US regulations has to comply. You should not rely, oh, my correspondent bank does the OFAC screening on their system. That's fine, they should, but are you doing it? And that's when you have two US banks working on it. But if you have a correspondent bank that is a foreign financial institution, then it's even bigger because they don't have to comply with OFAC. They do have to comply with their sanction screenings based on their laws, regulations, but they don't have to comply with OFAC. So that's your
Amazing.
decision on what is the risk level that you're going to get. But reliance shouldn't occur on cross-border transactions. You are responsible for your own screening of sanctions, even though the other bank is doing it at the same time. That's a dual control that should exist in every cross-border transactions with your correspondent bank. Vinny, I know that monitoring systems, the correspondent bank and the respondent bank may not have the same monitoring system, but is it comfortable to say that whichever they have on the system, they should have a country methodology, not only to consider my own bank country risk methodology, but also my correspondent bank country risk methodology, because maybe they're not the same on the methodologies. Should systems be configured this way?
Great point, Yeza. What you're saying, like, I think if you connect back to my first answer, I said when you're dealing in a correspondent banking environment, there is like multiple different systems involved. And as you said, correspondent bank would have a different system, respondent bank would have a different system. There could be slight differences in between the data structure as well. Now, what's important is, which you're saying, you remember like some time ago, I'm sure you do remember it as a compliance officer. Some time ago, there was a thing about this Russian banks that started when the sanctions were implemented so fast and everybody wanted to look at it. That was the time when correspondent banking thing was like very critical. And a lot of screening systems were not built in such a way that they're going to screen your respondent banks also, or your intermediary parties, right? And that's why what you're suggesting is a really good methodology, right? Any banks which is working in correspondent banking, they should use a country risk methodology where they are basically applying country risk on every single entity they deal with. Now, just to mention about a little bit about velocity, when you come and you use velocity, right, you have that opportunity. In Velocity, we even have our own country risk module, right? We rate our own countries in 256 countries. Every quarter, you get a report, which you could get to see it. But apart from that, not only, we basically risk rate your every party type, right? Along with that, we also offer some other data tools to basically do a country data resolution also, which is very important. We basically work with one of our bank that deal in cross-border payments, and they get a lot of different countries into their payment addresses and which are not accurate. So we have an AI tool which basically also resolve your countries to provide you the right country address, so you can assign a correct country risk rating as well. Based on that, then you basically scan your transactions. So now at the end, to refer to the Yeza's thought, what she's saying, I completely agree with that the policies of the country risk resolution should be set up in such a way that you're monitoring all different parties which are involved in a possible transaction.
Thank you so much, Jason and Vinit, also
You're
for
welcome.
answering these questions. It's been great spending the time with you guys, and we appreciate all the knowledge that we've been covering today. Let's get into some Q&A, some questions and answers from the attendees today.
Yeah, I think we got our first question. So I'm going to read out the question and then I'm going to answer it. I think this is referring to velocity, so I will take it, Yeza. So the question is, how does Velocity FinCrime Solutions with handle cross-border data privacy regulations while ensuring effective compliance monitoring? Very good question. As it concerns the data privacy, so we go by standard data monitoring and the audit protocols, whereas so Velocity is GDPR compliant, and we are also SOC 2 Type 2 audited every year with ISO 27001 audited also. So there is I would say all type of data privacy compliance regulated and audited we are. So we're managing your data very well, and it's encrypted and it's kept into the servers according to the countries the platform gets deployed to. Next question is, I think, how do you manage tension between the need of greater cross-border collaboration and constraints imposed by data privacy regulations? I think, Yeza, I'll take this one as well. Yeah, I think this is related to, again, this similar thing which I just basically talked about, the cross-border collaboration constraints are by data privacy regulations. Yes. I mean, I think if you get your system on the compliance platform, which you're looking for, majorly, and we're looking like cross-border, it has to be GDPR, and especially from US perspective, SOC 2 Type 2 audited, that these are the standards in the data privacy area, which basically will make sure that your data is protected and it is managing every type of data privacy as well. I mean, you rely on these standards to make sure that the data privacy is managed up to these standards. I think, yeah, we don't have any more questions.
We'll give one more minute. If anyone else has a question, feel free to type in. And with that being said, thank you so much, Vinny and Yesa, for answering the questions. As we conclude today's session on challenges of correspondent banking and international finance, I want to say thank you to everyone in attendance. Thank you for participating and engaging with us throughout this webinar. Very special thank you also to our speaker experts for sharing invaluable insights and actionable strategies to help us combat this issue. Always remember, the fight against financial crime is ongoing, and staying informed is our best solution. If you guys are eager to ask us any questions, please feel free to reach out. Also, if you want to explore more about Velocity, you can book a free demo to get a complete walkthrough. Staying up to date regarding trends in fin crime is also a good idea. Go ahead and please follow us on our social media handles, LinkedIn and X. With that being said, thank you, everyone. I'm signing out.